Good afternoon. The pandemic continues to cause tremendous
Global financial market participants are now speaking by collective record-size actions. The move to Bullion and the less secure fractionally Bullion-backed derivative complex is now making spot prices ramp higher. Whether by design or sheer incompetence, infinite QE policies ongoing are driving many to sell the fiat Federal Reserve note and many other fiat currencies for longer-term Bullion store value bets. $2,000 gold is here, and now silver is quickening on its outperformance catch-up. While the financial powers squabble over how many trillions they're digitally going to keystroke out of thin air next, we're going to review a bit of the bullion beatdown that's ensued since the mid-March viral spot price crash. Taking a gander at where we are right now and where we're likely headed soon enough. On behalf of SDBullion.com, this is James Anderson. If you too enjoyed the price action in the monetary precious metals this week, go ahead and obliterate that like button below. Let's hijack this algo and remind people we've been right, yet patiently sitting tight, for many years. As our bullion wealth preservation policies start paying us back and escalating valuations, let's remain grounded and humble. Be ready to help those who've yet to acquire bullion before prices and values get exponentially higher. Silver and gold are the respective number 1 and number 2 best performing asset classes now in the year 2020. The performance by both starting Tuesday this past week was superbly strong. Gold blew through the 2,000 psychological barrier like a hot knife, and silver made a run for $30 an ounce in spot price action. Neither retraced much in any profit taking to close the week. The gold-silver ratio has, in a matter of a few months, broken the derivative-driven near all-time high GSR we witnessed during the brief and intense viral spot price meltdown in mid-March 2020. This important ratio pierced back into the high 60s this past week. In July 2020, silver has had its best one-month run since the year 1979. If you are new and somehow stumbled upon this channel this week, go watch our June 26, 2020 video entitled Update Gold Price Forecast, Silver Price Forecast, Long-Term Calculations. That short 5-minute video will give you one of our working theses for where this building bullion mania phase may go. The S&P 500 stock market index is now getting close to its pre-viral crisis all-time nominal highs, mainly driven by 5 tech stocks, many of which might face antitrust breakups later this decade. Meanwhile, viewers likely remember that we covered in our late February 2020 video where this S&P 500 versus gold ratio chart was likely headed as the gold bull gained pace. Since that video, the S&P 500 index has lost over 22% to gold bullion. Additional note, watching the stock market mechanics of passive investing combined with the ongoing policies of infinite QE to prop up the corporate bond and insider-connected stock market shares, it's become clear, to me at least, that the Federal Reserve U.S. Treasury Meld's policy is to prop the nominal numbers so they look good, all while devaluing the fiat Federal Reserve note and the over 100 trillion unfunded liability pile. The Fed is literally telling us in CNBC headlines that they want more inflation. The fastest way to get there is by letting the gold price lead a raging commodity bull market. In terms of this chart, I suggest this general trend will continue. Moving onwards to the major 4 precious metal price charts over this full fiat currency era. Here we already see somewhat recent manic palladium price action, but also in the lower part of the chart, we can see that platinum is beginning to build energy. Now I know I promised you all out there a new platinum fundamentals video, and that is coming. But for now, there are a couple key points I would suggest that we can glean already. Before the viral crisis and near complete economic lockdown, I often wondered which between silver and platinum, which I believe are the two best long-term value buys still, which of them would you shape first? Given silver's monetary store of value role, I think the answer has become much clearer under infinite QE policies ongoing. Now, platinum is rarer than gold in terms of above-ground bullion supplies. It's much rarer. And if you think the wealthy, rich Asian platinum jewelry bid is not gobbling up shrinking platinum supplies, well, then I got a bridge down near a swamp to sell you. Before this 21st century bullion bull ends, I expect all four major precious metals to all nominally spike and record price within months of one another, similar to how they did in the first quarter of 1980. History rhyming would not be surprising. Now let's further put this recent silver run into an over 4-decade derivative price discovery driven context. This chart here illustrates silver price percentage over its 200-day moving average. It recently spiked to over 68%, and you can see where that spike fits in a historic context here. Looking back at the now completed gold price cup formation, this chart tweeted today by Craig Hemke of tfmetalsreport.com, let's take a look at his silver version that he put out too for an idea of how this breakout just might run in the months and years upcoming. These now built and building price cup formations are very important. Once they are cleared, the upside energy that can follow, they can become stuff of legend. Check out this 1970 to early 1980 gold price cup breakout. 4 multiples followed from here. And on the silver side, more than a 6 multiple followed. Here's where we stand again this 21st century. If you are new here, stay to the end of this video and click through to learn more on why we think this silver and gold bullion bull market is just warming up for the mania to follow. And to close, late last week, got a little chuckle watching this clip. New York Federal Reserve investment advisor, billionaire bond trader, and silver bull from the year 2011 onwards, Scott Menard was back on Bloomberg, politely dunking on Tom Keene's head, reminding us all that early in this year, in 2020, while he was in Davos, Scott declared silver his investment bet of the year 2020. Thus far, he's been spot on correct. Have a listen.
What sort of manipulation is having and the ripple effects across the rest of the market? Is it all in on gold, therefore, for the time being?
Well, I think, gold plays a very interesting role. One of the major functions of money is to be a store of value. When you get to the point that real returns are negative on cash or bonds, you've gotten to the point where what's the downside in owning gold? And I think that precious metals as a store of value are to be expected at this point. I think that despite the run-up, I think we've got a lot more room to the upside. And, I would remind Tom, who's there, that when we were in Davos together, he asked me what my number one pick for the year would be, and I said silver. So, I think in times of uncertainty and where the printing press is running full force, precious metals are the place to be.
That's all for this week. Take very good care of yourselves and those that you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.